All right, guys, welcome to another episode of Stock Market Review with Luwep Trading. Coach Lord is here. As usual, guys, we're going to get into it. I know you guys may be a little surprised tonight because we typically don't have a Friday night live, but this week was such an interesting week. I sort of felt like, one, I wanted to do that, and two, this is something I want to start doing more and more when it comes to having those Fridays live as well, because I want to keep you guys informed and keep these things going. All right. If you are here, make sure to give me that thumbs up, give me that like. At those interactions, for those of you guys who come on the live and continue to interact with the live, do help those videos get out to more people. The algorithm loves that. The algorithm absolutely loves you guys engaging with the live. That way they know this is not a bunch of bots over here just watching this thing, and this is real people. This is live people over here watching. All right. If you are here, I appreciate you being here. Again, drop me a thumbs up. Give me something. Get involved. If you have any questions, feel free to ask any questions. As usual, I will try my best to answer your questions. If there is something that you feel like I should know, I don't know everything, guys. You guys know that. I do not know everything. I will never presume to know everything. So if there's anything of consequence you feel like I may not that you can share on the live. Even other people that are on the live may be able to also. Uh, oh, please, I see that. Appreciate that. Appreciate that. Even for those of you guys, if you share something, other people that are on the chat as well might be able to benefit from things that you guys share. So feel free to engage and share. I appreciate that. I appreciate that. Really appreciate that, you guys. All right, so what exactly happened? James, as usual, I know you here. And Prayer Path, I know you have not commented, but I know you always here. You always here. I want to say hello to you guys as well. So, what did we see this week? All right. So we started the week going in with well, not Fire and Fury this time. We've had Fire and Fury before. So this time we were talking about sending people back to the Stone Age. And next thing you know, and I called it. I sort of called it. I felt like this was a maximalist, crazy, out of the world statement. And what I felt like was really going on was a possible ceasefire, and that ceasefire was front one with this, outrageous post. Then when there's a ceasefire, then you can claim, say, hey, I threatened to send them back to the Stone Age, so they capitulated, they got scared. Look at what I did. Unfortunately, it didn't work that way. I never really felt this was going to happen. But again, we live in a different world now. I'm saying how I felt about it, right? But that doesn't mean it could not happen. If someone had told me we would be at war with Iran, I would have said this is not going to happen. Yet here we are. All right. So the one thing you can say, the market manipulation game was on point. I mean, it was almost like clockwork. You can time every single time the market seems like it was about to break. Something came out, that some sort of breaking news about some sort of deal, some sort of ceasefire, some sort of thing that happened, and then you find out a couple of hours later it was all a lie. It was made up. So it was just to keep the market up. I mean, can you sort of respect it? I mean, that, to be honest, as an American, guys, most of us are Americans here. The stock market is the only thing we have left. The U.S. economy is in shambles. If you saw the inflation numbers that came out today, they were bad. I mean, they were really bad. And as bad as they were, it was not worse only because we accounted for a 20% oil price increase in the data, when the actual number is around 45% increase. And those numbers were really, really bad. All right, so the market was down 0.5% within 2 hours, and then right after we thought the ceasefire was not going to go into effect, then the Prime Minister of Pakistan came out with a tweet. But then that tweet seems like it was something that the U.S. gave him to put out, and he forgot to remove the part where they sent it to him, which was sort of comical, but it worked. It pushed the market up because it worked. This was the biggest data-driven week we're going to have for all of Q2. After that, of course, we have, I believe, we just started earnings season. So we're going to see a lot of volatility in the market. There's going to be a lot of stock going up. This is what I'm telling people. You still have to be careful, all right? Because while the market was dropping and it just pulled up, right? It just did a really nice retracement to a key structural resistance level. And then next week, what do we start having? We start having some heavy hitters as far as our earnings report. Now, maybe that will help it get it pushed up, but this, in my opinion, also set the stage for a major drop. And there's a couple of stocks I'm going to look at with you guys, or indices, so you guys can see exactly what is going on. Now, let's get right into the S&P 500. That is the SPX. I want to take a quick look at. So looking at the SPX, let's see what we are looking at here, guys. This is interesting. This is the SPX. So we had this ridiculous drop, right? Where did we go? We went right to exactly where I was telling you guys support needed to be, and we bounced. When we bounced, we did what? I keep telling you guys, hey, I see an inverted head and shoulder pattern. This is what I see. And inverted head and shoulder pattern, typically that means we are about to pop. So if I do it like that, there you go. And neckline was here. We gapped up and we ran. Now, that was a nice one. This is the thing. Let me just close this out real quick because I can't even see which no, that's the trend line actually. So what exactly is going on? Let me just take that off. What we have here, right there, this is what we call a gap. For those of you guys who are not familiar with the term, so that's a gap. So the market gapped up. The market always fill gaps, always. All right. So now, looking at taking a step back to look at this on the weekly, let's see exactly how we did in the weekly. Look at this pop on the weekly, right? This is where we are. Now, that's great. That's also scary. What do I mean about this being a bit scary? For now, I can remove those so I can have this look a bit more clean. What do I mean by this being a little scary, guys? What I mean by that is, if you look at that, what do we have here? Let me just take my tool. You guys will see it, and the fact that you guys have been coming here, you should know exactly what we are looking at. This is a perfect. Hold on. There you go. This is giving a head and shoulders pattern right as of right now. Again, this is not done. You can just put that even a little lower. This is not done. We can squeeze up. We can squeeze up. Absolutely, we can squeeze up. But you cannot negate the fact that this is something that is possible. All right, this is absolutely possible. When we take a look at that, that's on the weekly. Although we have this is a massive candle, massive candle. All right. Going back to the daily time frame, let me just remove the head and shoulder pattern that we have here. This is a massive candle, but look at what we're doing. We came right below that resistance level. This is what I was talking about, that key structural resistance level. And look at that. It is getting rejected. I told you guys we had some room to have that push, right? When we did that, we had some room to make that push, and we did. That's exactly where we went. Now, path of least resistance telling me this is a possible move down. How far down can that go? Can we continue to squeeze up? I would say most likely we might have a push down because when you look at the amount of green days we just had and how violent that move was, that was incredible. But then once you have started having the companies reporting earnings, talking about the numbers. Now it's no longer the war that's in the forefront. It's once again the economy. This is the one thing we do not want right now. When the economy is at the forefront, it does not bode well for us right now. All right. So let's go in the 4 hour time frame. You guys can see the 4 hours. What exactly are we doing? Big rejection. We try to push up, big, massive rejection. All right. We had a massive rejection, and we just came right to that trend line, right to the trend line. So this is where we are pretty much staying. What at the trend line? If we look at the 2 hour time frame, the 2 hours seems like it's getting ready to do what? Like I was telling you guys, it's almost seems like it's getting ready to do some sort of head and shoulder pattern. The MACD is way extended right now and looking ready to actually push back down because we do not have the momentum right now. There's no momentum. All right. Now, depending on what happens, one thing I want you guys to know, depending on what happens in Islamabad over the weekend, over the next couple of days, that may change the market completely. All right, so we have to keep an eye on that. Again, I keep telling you guys, I hate it. I hate the fact that it's like that, but this is the market we have. We have a headline-driven market. That's what we have. So we have to. We can't just sit there and complain about it. We have to adjust the way we trade. Now, if I have this, everyone should be able to see that very, very clearly. Okay, head and shoulder pattern. Actually, this is even lower. This is making this is making a lower right shoulder. All right. This is a head and shoulder pattern, and this is very, very, very clear. This is a head and shoulder pattern. All right. So we can see that here. This is very clear. That's the 30 minutes. And if you look at the MACD, what is the MACD doing? The MACD is actually pushing down. The MACD is pushing down. All right. Let's see. So the one stock I told you guys I want to take a look at with you guys is the SMH, because one of the stock that actually pushed the market as high as the market just went just now. The stock that pushed it up so high is the SMH. If you guys are not familiar with the SMH, that's all those that would be all those AI trade pretty much. That's the Nvidias, Broadcom. That's the chips, the semiconductors. These are the things that's been pushing the market up so much. All right. Now, if you have that trend line, you can take it from here. You can just go a little lower and take it from this previous high to this high and take it that. What exactly did it just do? It just topped out. That's what just happened. This just topped out right there, and this is giving us all that this kind of candle. When you have those candle, let me zoom in so you can see it, like an inverted hammer. An inverted hammer out of resistance zone. That's typically signaling, a reversal. All right, so we're looking at a possible reversal trade. Now, how low can that go? I don't know. I do not know. The only thing that I do know, I can see we have a massive gap here. We have a massive gap here. So can it just push down to come fill this gap? Not unlikely, because when those companies start reporting earnings, if we start seeing those companies, we start losing demand for chips. Some companies are pulling back a little bit. Especially now, you start hearing it more and more and more that companies are saying they are not yet seeing the benefits of AI yet. Besides firing a bunch of people to save money that way, they have not really seen the benefit yet. They're not making money yet. They are not profitable yet. All right. Doesn't mean they never will be. It just means as of right now, they are not. All right. And a lot of times when things like that happen, that's how you start having some companies pulling back a little bit. And while AI is still making the rounds and still growing, right? You also have those software stocks getting beaten down. I'm going to show you guys one stock that if any of you guys was in that stock and you were long in that stock, I feel really awful for you. This was not pleasant. This was an awful, awful week if you hold that and if you not cut it very, very fast. All right. So that's the SMH. That's the semiconductor ETF. That's what I wanted to show you guys because this has been the biggest bowl in the market. We are winding up the way we are winding up because those things have been on a tear. Now, just quickly, I'm going to show you guys very, very quickly what I'm talking about. When you go and you look at some of these things. So you have SanDisk. SanDisk went from just this week from 636 to 851. So that's one. You have STX. All those are part of that. So those guys, those companies are the companies that actually gives the storage devices. All right. So you have Syndis, you have Seagate. Right. Look at this move. Start. This is where the week started. You have like right around there, around 400. That's more than 100 points, as high as 517. Again, if you go to Micron, from way down there. Look at those moves, guys. Those moves are absolutely, absolutely insane. At some point, they will take a break. I believe Broadcom was one of those stocks that's, I mean, it's not surprising. I'm really upset that I missed that move. It's not. It's actually not surprising, but Broadcom was one of those moves that I actually missed because I had this thing drawn up, but for whatever reason, maybe I did not have my alert set up like I thought I did on this chart, and Broadcom pretty much took off. And unfortunately, I was not even aware when that happened because, as you guys know, the way I trade, this is the trade right there. Horizontal support, which I had already here waiting for it, and we also have that right at the bottom of that fallen wedge, right there at the bottom of that fallen wedge. And look at this move. This is painful that I missed this. But there's always another move. There's You wait for the next one because that was a move. That's from 293 to 371. This is not just a double up on your money. We're talking about quadrupling your money. I mean, that's even more than that. That's like four, 500, 600, 1,000% return if you choose your strike price right. That's 289 to 371. That's 100 points. That's 100 points, guys. Now, this is a different story. If you hell, let me see, let me take a look at Amazon. Well, Amazon actually, I talked to you guys about Amazon, and unfortunately, again, I did not play that. That's painful. That is absolutely painful. If you take a look at, this is the stock I was talking about, right? So we went and did a double top, and look at this drop from 224 to now 165, 166. That's the move we had on software. All right. So again, these stocks have been on a tear. That's what really pushed the market high like that. That's the semiconductors. It pushed the market higher. Um, it's not a very pleasant thing to say, but for a lot of people, the reason those stocks were going up that much was because of the threat that when Iran started bombing those data centers, I know a lot of people are very, very upset with what that girl did on CNBC. While we had about possibly wiping out the entire civilization, and she was trying to look at it as well, would that be upside or downside in the market? And people were like, that's very insensitive. We're talking about potentially millions of people dying, and you're talking about is that either good or bad for the stock market? Because some people are completely detached from reality. But the truth of the matter is, the reason these things are going up that high by bombing that Amazon data center, and I believe it's an Oracle data center, what that means is those companies are going to need more chips, and that's just the way Wall Street interpret that. Those companies just lost a ton of equipment. They're going to have to replenish those equipment. That's the chips, and that's the storage devices. They are going to need those things, and that's why you see the market went the way it did. But again, I want you guys to remember we are entering earnings season, and earnings season can be no joke. It's either we're going to push through, go make a new high, or guys, we're about to drop like a brick. All right, that's exactly what's going to happen. Now, the other thing I want you guys to think about, there's a bunch all those stocks that just ran very, very high, like okay, Meta did a big push up. all those stocks are currently at resistance. So that's the thing you have to keep in mind. All those stocks are currently at resistance level. If we keep taking a look at these things, let me see. If you take a look at Google, you can see Google went to resistance level and it's rejecting. You take a look at Apple, it is the same thing. Apple trying to move up, it's finding resistance level, which would be like right here, right? Let me just see where's everything here, so that way the chart is not too busy. Right here, Apple is finding that resistance level, and it just cannot take it, cannot push it. Now, not saying it cannot push it, but the higher probability trade would be most likely a bit of a pullback. Maybe to come back and get some strength and just slingshot up. But this is what this is looking like as of right now. All right. Well, that's about all I have for you guys. If you guys have any questions, feel free. This is a free flow, and this is a Friday. I typically don't do Friday lives, but we're gonna start doing those moving forward, just to give you guys a recap on the market, to see how things are going in the market. So I wanted to come on and just show you guys all these things. Let me see here. Okay, no questions yet. Just wanted to come on and just show you guys a couple of things here, and whatnot. Let me see here. Now, the next thing I wanted to talk to you guys about. Again, I know I say that more than 1,000 times already. If you survived this week, the past couple of weeks or the past month, I want to say congratulations. That's one. That's if you survive. If you even if you lose money, you survive. I want you guys to be proud of that, because that was a very choppy, very tricky market to navigate. Today we up 20, tomorrow we down 15, and it was choppy and really bouncing up and down, making massive, massive move, overnight move. So that means you don't really have time to get out of place, because it's making some ridiculous, ridiculous move. Now, the other thing I want to talk to you, the other side of that is, if you made money, congratulations, but I do not want you to get overconfident. What just happened is not normal. I want you guys to understand that. What just happened is not normal. All right? That literally, um, yeah, if you're trading intraday, you can say you've seen the charts and you've seen how the charts are moving. All right? Now, if you were just buying swings, if you were buying swings, you need to admit that. I understand this might be hard for you, but this was just pure luck. What I mean by that is, by pure luck, is because this was not driven by really by technicals. This was driven by fake headlines being tweeted out at very strategic time to keep the market up, because that's the only thing we have left in the U.S. economy. So this is not really, well, it's not something that's always going to happen. I don't want you guys to get overconfident and you start taking, you start not managing your risk. You start going all in on one trade. You over trading. You doing all kind of stuff and taking crazy risk. Excuse me. I want you guys to be careful of that. But regardless, as long as you made money, congratulations anyway. I hope you just take that win and come back next week brand new, refreshed, and ready to go. Just be careful. And the next thing, this is the homework I will give you guys. Take some time, even if it's 1 hour, just to reflect on your trades, reflect on what went wrong, reflect on what went right, reflect on trades you missed. I have a lot of that to do. I have some come to Jesus moment to do, and whatever. So I want you guys to do that. We reflect on a few things, and whatever, and take the time. Really, really, really look at your trades, the trades you missed, the trade you got right, the one that did not work out, the mistakes you made, because that's how you grow. You want to constantly, continuously growing as a trader, and this is what's going to give that to you. All right, guys, I appreciate you guys being here. I have to go. It's Friday night. I can't really stay very long with you guys. It's Friday night, but I do appreciate you guys being here. You guys have been awesome. I will see you guys on Sunday night for the live at 9 p.m. Eastern time. But I do have a video dropping tomorrow morning. I do have a video dropping tomorrow morning, so be on the lookout for that. So if you want to make sure you see that video as soon as it drops, make sure you subscribe. Make sure you hit the notification bell, the little bell icon. Click that so when I drop that video, YouTube can send you that notification so you can see it right away so you don't miss anything. All right, guys. I appreciate you guys. Thank you for being here. Have a great weekend. Go spend some time with family and loved ones and friends and whatever. Have a good one. I'll see you guys on the live on Sunday night, 9 p.m. Eastern Time. Thanks for being here. Take care, guys.